If you're starting from absolute zero, the financial markets can feel like a minefield designed to take your money. You want a safe way in. I know the feeling. Over the last 6 years, I've experienced both sides of this industry, from blowing through accounts in my early days to finally pulling consistent, predictable profits. I found consistency by moving away from gut feelings and adopting a specific, repeatable sequence of steps. If I had followed this roadmap from day one, I could have cut my learning curve in half and avoided thousands in avoidable losses. By the end of this video, you're going to have that exact 7-step plan. We're going to cover exactly which market to trade, the specific software you need, and how to execute your first trades without risking a single dollar. Step 1 is choosing your battlefield. As a beginner, you generally have 3 choices: stocks, crypto, and Forex. Many people default to their local stock exchange, but the Indian market actually puts beginners at a disadvantage. Between high taxes, brokerage fees, and restricted leverage, the math makes it difficult to turn a profit early on. Think of trading the local stock market like opening a restaurant in a tiny, isolated village. Even if every single person in town eats there, your growth is capped by the small population. Contrast that with the Forex market. Forex is the equivalent of opening that same restaurant right in the middle of Mumbai. The liquidity is deep, the potential is vast, and there are far fewer artificial limits on your growth. Once you've chosen Forex, step 2 is finding a way to access it. This is where your broker comes in as the mandatory middleman. You want to buy, someone else wants to sell, and the broker connects you, taking a small fee for the service. But you have to tread carefully. The internet is flooded with unregulated brokers who can artificially inflate your losses or completely lock you out of withdrawing your own deposits. Choosing a liquid market and a regulated partner allows you to focus on your actual trading skills rather than worrying about high fees or a broker disappearing with your money. With your broker locked in, step 3 is choosing your front-end platform, the actual software where you will view the charts and click buy or sell. Don't overcomplicate this part. MetaTrader 5 and TradeLocker are widely supported by most brokers and offer the cleanest, most straightforward interfaces for new traders. Now comes step 4, your education, and this is where most beginners fail. They fall into the trap of over-knowledge, trying to memorize every single theory, indicator, and chart pattern in existence. You need to ignore the noise. Throw out the complex candlestick patterns and messy indicator screens. You only need to study 4 core technical concepts: liquidity, support and resistance, trend lines, and volume. Focus on liquidity first. It reveals the footprints of the major financial institutions and tells you where the market is most likely to go next. Mastering how these 4 specific variables interact on MetaTrader 5 will give you a sharper edge than having a shallow understanding of 50 different trading varies. Step 5 is taking those 4 concepts and forging them into a strict, mechanical trading strategy. No gut feelings, just rules. Every valid strategy requires 4 exact parameters: your specific trading setup, your exact risk management rules, the specific time window you trade in, and a single instrument, like gold, that you specialize in entirely. Step 6 is proving your strategy works through backtesting. Apply your exact rules to a year of historical data, logging every win and loss. As patterns emerge, like consistent losses on Friday afternoons, you filter those variables out and watch your success rate climb. Keep tweaking and filtering until your backtested strategy hits an 80% win rate. That is your mandatory benchmark. We set the target that high because live markets introduce slippage, execution delays, and your own human panic. An 80% win rate on paper usually translates to a steady 60% win rate when the market is actually moving. Step 7 is your bridge to the real thing. You open a free demo account on MetaTrader 5, which gives you fake money to practice executing your trades in a live market environment. Risking your hard-earned savings before hitting your targets on a demo account ensures you'll lose money due to a lack of preparation rather than a lack of opportunity. You now have a complete framework. You know exactly what market to trade, what tools to download, what concepts to study, and how to mathematically prove your strategy. The final transition happens only after you are consistently profitable on your demo account. From there, you either fund your regulated Forex broker account with real money or purchase a prop firm challenge to trade larger capital. Your first move today is simple. Go download MetaTrader 5,